and welcome to this week's Market Outlook webinar. I'm David Jones, and I do this every Wednesday lunchtime at 12:30 in conjunction with EURUSD Markets. If you're watching the recorded version of this, it was held live on Wednesday, the 1st of February at 12:30 in the afternoon. I'll just click this over so you can see the risk warning while I'm talking away. It's been an odd week. Well, it's been an interesting week. We saw big moves in the US dollar yesterday, and it was really off the back of what Mr. Trump's trade advisor had said about Germany, about how they'd basically really benefited from, I think, an artificially weak euro or something like that. So we saw the euro gain some ground yesterday, and the dollar weaken across the board. So it's we saw some sort of fairly big levels broken yesterday, but we'll take a look at those. The other thing today, as we're doing this now live on Wednesday, later on today we've got the interest rate decision from the US Federal Reserve, and this will be the first time we've heard from the Fed since Donald Trump took power, moved into the White House. So I think the market expectation is for 3 interest rate rises this year from the US, but I think it's probably unlikely we'll get one today right at the start of the new administration. But I think it does mean typically a really dead day ahead of this, plenty of volatility over the announcement. So personally, there's not much I'm looking to do today until this is out of the way. But we'll talk more when we're having a look at some of the markets that can be affected. So we're nearly ready to go. Before we start, just a quick word from our sponsors. EURUSD, as you know, you can do your own self-directed trading through EURUSD, but they're fairly big in social trading. So they're running this social trading championship. So if you fancy yourself as a trader who other traders could follow and make money from, you might want to have a look at this social trading championship. You get commissions if people follow you, but also there's the chance to win up to $250,000, so $250,000 up for grabs. If you're interested, go and have a look at the website. The website is next-trading-star.com. So if you take a look there, there's all the details from EURUSD on their trading championship. Right, let's get started. I'm going to start. What I'm using for this is EURUSD's trading platform, Trade Hub. So that's where all the charts are coming from on this. And I thought I'd start off a bit of a different one actually for a change. This is the only. I tweeted about this a bit earlier this morning. This is the only one I'm really watching today because of this Fed thing that's going on, something that hopefully won't get affected too much by what happens. It's the euro against the pound. I think it's an interesting one, this, because just to walk back to what we've been through, clearly that was the referendum last year. The euro strengthens against the pound, not surprisingly, moves higher, moved out October last year, up above sort of 90, 91. It's come back, but the old big level has held again, and those of you who've been on these webinars before, will know what a big fan I am of big levels. Previous highs and lows, I think play an important part. Let's chuck an RSI on here as well for the people who like the squiggly lines. Let's put an RSI on. There we go. So you can see sort of how important post EU referendum vote this sort of 83 level was for euro sterling. The market pushed up, then sold 800 points off. Once again, this level's held. And during December, this is where we've seen the euro turn around again and gain ground against the pound and pushed up to sort of 88.50. It sold off a little bit, but for me, this does look like the start of another run of strength in euro sterling. So I've been looking for an opportunity to buy, and the chart I've been looking at is the hourly chart. Here we go. Let's just bring that up, zoom that out a little bit. So that was the correction that we'd seen over the last couple of weeks or so. So for my money, that correction is over in euro sterling. Let's just plonk our little line on top. There we go. So if you're a fan of trend lines, there we go. That trend line is over. The market took a couple of days to turn around. Yesterday we had a higher high than the day before, which was a higher high than the day before, so the market's clearly trending up. So for me, if I'm looking to do a trade over 2 or 3 days, the fact the market's been moving higher, any weakness is for me a buying opportunity. So I've been looking at this morning, thinking about a place to buy. And the most important thing, first of all, is where's my stop going to go. So the closest I would want my stop on euro sterling is the other side of 84.90. Which was the low from a couple of days ago. But ideally, I want my stop down here because I think it could sort of weaken and faff around a bit here. But for me, if it breaks below 84.70, then it looks like the argument for this being a recovery is over. So I want to buy. And I think I will buy today, just as soon as it stops going down. I've been keeping an eye on the 10-minute chart today, and it's been slipping a little bit. It was only, half an hour ago that it made new lows for the day. So I've just been looking to see if it forms some sort of a base here. So I don't normally trade off 10-minute charts. I make my decision off the dailies and the hourlies, but I just want to see this thing stop going down for today. And maybe we've seen it. We'll see what happens this afternoon. But I think for me, the immediate one that maybe, hopefully, won't get too affected by what's going on this evening with the Fed is euro sterling. So I think there's the argument that euro sterling has made a base again, and for me, the obvious first target is a run back up to these highs from the end of December, 88.50 highs, so 300 points higher than where we are now, and maybe ultimately back up to these highs from last year. So I think for me, if there was one to watch this afternoon, euro sterling is the one. I think the rest of them, like I say, anything with the dollar in, I think could be a little bit flat until we get this Fed announcement, this interest rate decision later on this evening at 7 o'clock, I think, UK time. But I think euro sterling is an interesting one to watch. Let's have a look at some of the more mainstream markets. Euro dollar. I had a losing trade on euro dollar yesterday. The thinking behind it was brilliant. Just what Mr. Trump's advisor said, put a bit of a spanner in the works for me on euro dollar. But actually, looking at the dailies, it maybe wasn't that great a trade. But on euro dollar, I think it's a difficult one, euro dollar. I've talked about this a lot in recent weeks, because the weakness we saw at the beginning of the year, I was really surprised by, because I've gone out too far. Because for 2015, the euro was building this base ahead of sort of 105, and I thought, well, this is a base in place, and we're going to start, maybe start some sort of recovery. But at the beginning of the year, end of last year, it did poke through that base, which sort of invalidated the base building, but it's rallied off then. So I think it's been a bit of a tricky one to trade. But I was looking at euro dollar yesterday. Where were we yesterday? Sort of here, and it had a good run for much of this month. We'd had a good trend up in euro dollar. So if we drew our trend something like this from the 3rd of Jan, down here, these spiky lows up to there. But then the day before yesterday, it clearly struggled up here. We'd seen a couple of days where it really couldn't move much higher, and I thought, well, maybe is the euro running out of steam? Let's zoom in on the bit up here. Let me bring some crosshairs into this. So we'd had January the 23rd, January 24th, January 25th, really knocking its head at the sort of 107.75 level. And then the market weakened, broke this level here, rallied, and just moved lower again. And I missed it, really. I should have got short there, but I didn't. And then the market, so I had an order in yesterday to sell at 107.38 if it went back to retest these highs. It did retest these highs and blasted straight through them. So we saw euro dollar move above 108 yesterday off the back of Mr. Trump's advisor's statement about the euro being artificially low and Germany benefiting. So I think for now it is difficult with what we've got this evening. All bets could be off with what we've got this evening. But if we I've got my RSI out of the way. But if we took a step back and looked at the trend now, the move yesterday does suggest this uptrend in euro dollar is not over, because it's moved out to new highs. So if we go back to that trend line, my trend line now looks something like that. So now I would have to force myself to reverse my position and be a buyer on weakness. But I think I'd rather wait and see how the markets react to what Mr. Trump says. Not Mr. Trump, what the Fed says this evening. Unless he sacked the Fed and he's going to start running the Fed as well. Who knows? But let's wait and see what the Fed says this evening. But for me, now I'd be a buyer of euro dollar, and I think we've got lots of big support now down at these levels, 105.80 to 106.20, these sort of levels. But it's an interesting move yesterday, and definitely wrong-footed me on that one. Pound against the dollar, and a lot of this stuff is pretty moot, I think, at the moment, until we get the decision later on today. we could have just a bit of a quiet dead market. I still think there's an argument to be bullish on the pound. This is the bigger picture view here that we're looking at. If we were going to, it's a bit of a spurious trend line this, but if we drew a trend line from the highs back in the Brexit night highs, you could argue that trend's over. I don't think it's a particularly good trend line, to be honest, but you could argue again that we've made something of a base. Clearly, I think it's very difficult to get really excited about medium-term recovery in the pound until and if we see these December highs broken. So I think for the longer-term people, let's call it 128. 128 is the level to watch in the pound. It's had a good run in recent weeks. But again, like the euro, maybe that trend has stalled. I think it'd be interesting to see again how it reacts a bit later on today, because we've got a definite barrier. Maybe the better trade I should have done was to be short the pounds rather than short euro dollar. We've got this big barrier up here in the short term, 126.75. In the markets, had another look at that today, and has come off a little bit. So again, if you really wanted to be short the pound going into tonight's Fed meeting, you could be short here at 126.32 with a stop above 126.75. But just bear in mind it does tend to get volatile over these announcements. Let's see at 7 o'clock. For the fans of the squiggly lines, the RSI is definitely adding to the argument. This is the most overbought we see in the RSI for a couple of weeks. We've got to go way back to here when the RSI was last this overbought. So that does add to the argument if you wanted to be short the pound up here. And it has spent, a couple of days selling off from this level after a real sort of, it's put on something like 700 points over the last couple of weeks. So it maybe is a little bit overcooked up here, but as ever with these sort of announcements, you can never really be too sure. But I think it's interesting up here. Let's see what happens. Let's see where we are at 8 o'clock this evening. And see if we do get this level breaks, if we do see a sustained move, then clearly, the big level is the one off the daily chart, the sort of nearly 127.75-ish, to that 128 level. Let's see what happens. But I think plenty. I wouldn't sit there watching markets much today until this announcement's out of the way. But let's see where we are once the announcement is made. One that is still trending, so one I have made money on this week is New Zealand dollar, an old favourite. New Zealand dollar, US dollar. It's had a really good run, this. And I think just yesterday it punched out to fresh highs for the run up. So let me, let's do that. Let's do that. So we'd seen the market had gone a little bit sideways. When did I buy in? I bought in, I think it was Thursday last week on one of these pullbacks. 26, does that sound about right? That sounds about right, yeah. I think it was 72.35 or something like that. I bought in, and the market went nowhere for a few days, and then got a move on yesterday. Sorry, so I got taken out yesterday for I think just under 100 points in the end because the market moved higher. But yesterday, it's made a new high for that uptrend. So for me, we've missed the opportunity. The opportunity was 4 o'clock this morning, but the sell-off, from here was another buying opportunity into that New Zealand dollar, US dollar trend. And it's probably, against the dollar, against the markets that we look at, it's probably one of the strongest at the moment, just because, actually, the euro is strong as well. So euro and New Zealand dollar, because it punched yesterday, it gave up the gains pretty quickly, but it did punch to a fresh high for this rally that started back in December. We looked at this last week and said, it'd broken these previous highs from December. We're getting maybe into the danger zone for the bulls of New Zealand dollar, up here, 74. It's a big level, then 75, 74.90 after that. But that trend is still strong, so maybe we'll get another little push higher, maybe having a look at 74. So New Zealand dollar, US dollar trend, I think, still very much strong. But like I say, everything is all a bit on hold until we get these this announcement out of the way this evening. So let's see what happens. A slight divergence. Yeah, I've got 2 trades on there. I've got Euro Yen trade on at the moment, which I narrowly missed getting stopped out on yesterday by about 2 ticks, which was so that's a bit of luck in my favour. But again, just basically that the market's been trending higher. It's been a little bit sideways actually on the daily chart, but on the hourly chart, there have been some big levels in place. sort of down here, which did get spiked through yesterday, 121.13, but the market's managed to push higher. So maybe we'll get a run up to there. But the one I was going to look at was the bund. I've talked about the bund a little bit in the past. Let me just go, because that's the only other trade I've got at the moment. Let me just have a quick look, because it's interesting at the moment what's going on in the bond markets. And again, clearly, you know, we should probably see plenty of volatility tonight. There we go, Bund March. Oh, it is in my watch list. Okay. Where is it? Why can't I see it? There it is. There. Okay, Bund March. I think it's been interesting what's been going on. You see similar sort of moves in the US Treasury bonds, and I think these are really they're markets that tend to be not that popular with private investors, retail investors, in my experience, but they're really tradable markets. So this is the European government bond. You know, we'd had this sell-off that had been in place, which looks, I don't know, something like that, I suppose, like that, and a bit of sort of chop here, November, December time, and the market has staged a bit of recovery, has sold off a bit, but over the last couple of days, we've seen a definite base forming. Here we go. So Jan the 26th, the market was really weak. And again, I think I've talked in the past, for me, how markets react around the previous day's high and low is an important one for me. And we've seen on the bunds, this has been a really big level. It's turned out to be a big level. So Jan 26th, around about 161.31, the market hits the low. There was no way of knowing it was going to stop there. But then later in the day, it comes down and tests it again. And I'm a big fan of this sort of setup where a market tests a previous low and moves away, or a previous high and turns away. And then on, I think that was Monday, the market did again. And I missed it. I missed this because I was driving back from London. So I missed it there. But I did have yesterday, the market sold off again early on. So I got in, I can't even remember what the level was. I can't remember, 161.40 or something. And the market's moved higher and it's sold off again today. So for me, I'm looking for a move higher again from here with a stop the other side of this level. But I think bond markets are interesting and quite technical markets to look at. So for me, let's see how that performs. But it'll be another one clearly that's affected by what goes on in the US this evening. But let's talk about stock markets, because it's another interesting one. Stock markets. This is the German 30 first of all. I must admit, I didn't think a week ago we'd be here on the German 30, the DAX. Let's just remind ourselves where we were this time last week. So this time last week, I think we were here, 25th of Jan. Does that sound about right? Yeah, that was last Wednesday. So we'd had, this is the daily chart we're looking at. So we'd had stock markets pretty much trapped in a sideways range for much of this month. So pretty boring, tight range. And I think I tweeted a few times. It's the tightest range. It had been the tightest range we'd seen in the Dow for decades. Recent weeks. We had 6 weeks where it didn't manage to move 1.5% on the week in terms of range. So it had a really tight range. And the DAX broke out, and we were looking at this last week. Maybe let's flip it over to the hourlies so we can take a look at that breakout. Here we go. So that was the move. And I remember saying last week, so we'd have been about here. I think that the difficult thing with breakouts is, you know, it's a dilemma. Do you think, okay, the market's breaking out, I'm going to jump on board and buy it, which is fine, but then the market might reverse, and, you know, if it's had a sharp move, you could get a sharp reversal. Or do you wait for the pullback and get a better entry point, but of course run the risk of the market never pulling back and just running away without you? So it's a bit of a problem. But what we've seen is, I mean, the DAX pushed higher, pushed up to nearly 11,900, but over the course of the last few days has sold off, you know, yesterday. And once again, I hate banging on about this, but I don't really. The big levels have come into play. You know, hang on, if I could draw them properly. The old low from down here, I haven't drawn that right. But around about, well, ahead of that 11,500 level, once again, so far, it has proved to be the turning point. So, if you were really bullish on the DAX and think this is a valid breakout, this is just a pullback, when we're down here, this is the buying opportunity with a stop maybe the other side of these lows. I must admit, I would have missed this because basically for me, it's turned around too quickly. You know, if tomorrow it sold off, came back down and bounced again, and we get that nice little sort of double tap set up, then it looks like a better opportunity. But I think it's quite interesting, first of all, how much it's given up all of that breakout, but also it's turned around ahead of the old support from just before the breakout. So I think 11,500 is clearly a big level to watch in the DAX. So I'd definitely be inclined to be a buyer on weakness, you know, because the market clearly, stock markets, you know, if we go back on the dailies for the DAX, you know, since there's the presidential election spike that I think has wrong-footed plenty of people, me included, but the trend for the DAX is definitely up. So we touched nearly 11,900 on that breakout. There are some problems coming up. You know, it's not all plain sailing. You know, we've got levels, you know, just up here and up here on the DAX. So the DAX is not at all-time highs. There are definitely some hurdles, but I think for me, based on the hourlies, it's interesting that the market has given up that breakout, but then started moving ahead again. So I think for me, the closest I would want my stop is probably below yesterday's low, but ideally the other side of this, which makes it 150 points away from where it is now. Now, if you think the market's going to move, I don't know, 400, 500 points from here, then 150 point stop is perfectly sensible. But for me, I'd rather get in on a bit of weakness, but I run the risk, obviously, of missing out. The FTSE's been an odd one. FTSE has been quite an odd market, this one. So we were looking at this last week, and again it was forming a base, and I thought, well, maybe we're going to see a recovery, but we haven't. It's broken down. It's doing almost opposite to what lots of other markets are. And of course, the pound strength is a factor here. When the pound is strong, the FTSE weakens because so many of the UK listed companies in the FTSE 100 make their money abroad, so a weak pound is better for their profits. And it's been really quite choppy trading, I think, for the FTSE. I must admit, it's a difficult one for me to call, because you could argue, because of the break we've seen, that the trend, most recent trend for the FTSE, or is it still down? It's just all a bit scrappy, isn't it? I suppose if you thought, well, actually, I think the market's going to rally from here, you'd be a buyer here, and I would want my stop loss under yesterday's low, so the other side of 7,100. So you've got 50 points risk, and if you think the market's going to recover all the way back up here, you've got 200 points upside. But I just think it's been a little bit scrappier, the FTSE at the moment. There's the daily chart. There's the bigger picture. We had this record-breaking run, didn't we, at the beginning of Jan, where it set fresh all-time highs on a daily basis for 11 days, I think. I still think this looks like a pullback, but it's just been a little bit scrappy. So I think it's a difficult one to call at the moment, the FTSE. And the US markets, let's have a quick look at the S&P. I think the DAX, the German market, is probably the most interesting at the moment in terms of stock markets. But let's just catch up with what's been going on in the US. Let's look at the daily chart. You know, again, we've seen markets give up ground a little bit, but if you look at the daily chart, which is what we're looking at here, you know, it is, again, it's just a little correction, isn't it? It's just a little correction that we're seeing. So I think, again, the bias for US stock markets would still have to be up. If we flip it over to the hourly chart, I think we'll see some levels. There's a run on the S&P out to fresh all-time highs. Like the DAX, gives up the gains. Perfect little trading setup yesterday. Comes back, tests the previous day's low, and has taken off since then. So in the short term, this sort of 2266, 2265 area is a big one. For the longer term traders, 2255 is a big one. If you lost that, you have to start worrying about maybe, you know, something of a deeper sell-off. I think if we broke below that level. But again, you know, lots of support if the markets did sell off quite heavily. You know, 2255, 22, whatever that low is, 53. So I'd still be inclined to be a buyer of stock markets, US and the German market, on weakness. But again, we should expect, you know, I think a quiet day today until this Fed announcement is out of the way. So that's the S&P. Let's look at commodities. Gold is interesting, but let's not look at gold first of all. Let's look at oil. Because oil, you know, my view on oil, I think, is still the same as it was at the beginning of the year. I think this could be, you know, the year of further recovery in the oil price. You know, let's just remind ourselves where we've been. This time last year, you know, it was all massive doom and gloom for oil. You know, down at $28, $26 a barrel. The market staged a turnaround, as it often does, you know, at extremes of pessimism, or optimism, the market will do completely the opposite. So we saw this run back up to the 50s, then a bit of a choppy 6 months, but has ended last year punching out to fresh highs for the recovery. But it's been, you can see, it's been a little bit tight and a little bit quiet since then. But I'd argue the bias for oil is definitely still up. If we were going to draw a trend line, it looks something like this. So there's a clear uptrend in oil. I'd want to be a buyer. Ideally, below 50 would be a great place to get in, I think, with stops the other side down here, or maybe in the mid-40s. But I think the bias for oil is still up, but it's just being a little bit boring. There we go. That's the last few weeks. You can see real sort of sideways, choppy trading. It's such a volatile, crazy market. Breaks to new lows yesterday, and then runs up $1.50. So I think it's always for me a tricky one to call in the short term, but I think the bias for oil this year is still definitely up. The final market we're going to end on is really interesting. I had an order in to buy, but I've missed it. I've missed it so far, and it's gold. Let's just remind ourselves where we've been on gold. I think gold again is another one that could be one with an interesting theme this year. Just to take us back to the bigger picture, we had in recent years. The trend for gold, the theme for gold has been down. It's been year in, year out, it's slipped to fresh lows. But that changed. That changed last year. And we saw something of a comeback in the price of gold. We managed to break out this latest bit of the downtrend. So the price ran up to sort of 1350, 1370 area, but then it weakened. We saw the price of gold come off, and I was surprised by the amount of the decline last year. But I think I was saying in webinars last year, I think we'll see it up here before we see it below here. Famous last words. So far, it's working out, but let's see. But we had a really good run. Let's flip over. Maybe the 4-hour chart is a better chart here. Here we go. There's really good run in gold from December, just sort of Christmas time, when it was trading about 1130, so $1,130 an ounce, and it ran as high as what, 1215, 1220. And a really nice uptrend. I saw someone on Twitter say, it's a really ugly structure to the uptrend, and I thought, what a load of cobblers. It's not an ugly structure to the uptrend, because it was just going up every day. It's ugly, of course, if you can't get in, if you're waiting for the pullback. But we had this just days and days of gains in the price of gold, and it has come off. It came off, and I think I was tweeting about this the end of last week, saying that you just got to view it as a pullback, because the trend has been so strong, and there are lots of different support levels. It did break below that one there, but there was support there and bigger support back down here ahead of 1170. So I think I was trying to buy 1194 with a stop at 1170 or 1168 or something, but I missed it, and the market's moved ahead. But I think that the bias for gold is still up. I think any weakness back into the lows of the last few days looks like a buying opportunity. If it sells off and then rallies, it looks like a buying opportunity. And I think it's only if we lose this 1170 mark that we have to worry about a deeper sell-off in gold. So clearly the trigger would be if it could break through these recent highs. That would be a good trigger to suggest that maybe the market's going to move higher. But I do think that the theme for this year could be us getting back into those highs for last year, around about the 1350, 1370 sort of area. But I think in the short term, I'd definitely be a buyer of weakness on the price of gold. So let's see. But again, another one that is clearly, because it's gold, US dollars, so whatever the dollar does, gold does the opposite. So it's another one that could well be volatile over tonight's announcement. And that's it really for today. It's always an odd one when we've got these big announcements coming up. So for me, the immediate one to keep an eye on. Let's see what it's doing. Euro sterling. Where is it trading now? Okay, it's sort of stabilizing, 85.47. That's on the 10-minute chart. But for me, euro sterling, because we've had a correction, we've seen some stability. Is this the start of an uptrend? So I'm happy to bet that yes, it is the start of an uptrend. Maybe back up to these old highs. Let's see what happens. The DAX, the German 30. Oh, it's still going up because it did break out just last week, and then it's given back all of those gains, but it's turning around again. So I think that's interesting. And then let's see how markets are after this evening's Fed announcement. There's euro dollar just chopping around now but let's see, we'll maybe get a bit more indication as to what's going on once this Fed thing is out of the way this evening at 7 o'clock UK time. But lots to watch as usual. Stock market still positive, gold positive, euro positive after the break yesterday. Let's see if it gets changed by the Fed. We'll wrap things up there. I've written some stuff about my trading in January. I think I said at the beginning of Jan I'd had the worst week I'd had in weeks and months actually. A really poor start to January, and it ended up being not so bad in the end. So I've written a blog post. I'm going to put it on Twitter a bit later on about lessons learned during January. So I ended up, I think, just over 3% up for the month. But I'll put a blog post. I think there's some interesting stuff in there, and I'll send an email out a bit later with a link to that and webinars over the month. But for now, let's wrap things up. If you have any questions, feel free to drop me an email. I spend far too much time sitting in front of screens doing nothing. So drop me an email, david@tradeafter.com, to find out more about social trading with Ayondo, where you follow other traders. If you go to my website, tradeafter.com, there's a bit of information on there, and you can follow me on Twitter for half interesting charts and things, and my Twitter address is @JonesTheMarkets. But we'll wrap it up for this week, just over half an hour, and we'll do it all again. When do we do it again? Next Wednesday. Next Wednesday at 12:30. Thanks very much.